we cannot look at variances without talking about budgeting again. Notwithstanding, we have gone through budgeting. And if you remember, I talked about issues under budgeting as the type of question in the November 2018 exam setting, and that of the cash budget that I took you through. And I explained that the cash budget falls in line just like a receipt and payment account. I really want you to still reflect on those issues again. And again, we have a lot of topics with steps, which we have gone through a lot of them. Please and please again, try to master every topic that you think it is having step. You can pick them one after the other. Just like the case of, say, key factor analysis, throughput accounting, those sort of issues. You pick them up one after the other. Okay, you just ask yourself, if I want to determine optimal production plan under throughput accounting, how do I do it? You don't look on any question or any other document or whatever. You just take a pen, paper, a plain sheet of paper and a pen, then try to put down the steps. If you're not able to put down the steps, then that means that you have a limitation. Whatever questions you solve in the past questions does not necessarily mean that you are getting the same thing on the day of exam. It is the understanding which will lead you throughout. So if you have solved one or two questions and you think that is the same thing coming up, you will not get that same question. Maybe you may get it, sometimes you may not get it. But it's important for you to understand it, so that whether the question coming up is something you have seen before or not, you can still get it done. Right. So in this chapter, we will cover the following topics: basic variances, operating statement. As you look at your syllabus, these things were picked from your syllabus. Then investigating variances. This is the side which is of importance. The student can calculate the variance, but are not able to do the talking aspect of what? The calculations. So we are looking at variances. And if you talk about basic variances, we have variances in the case of sales. Permit me. We have variances in the case of sales. If you look at the introduction to management accounting paper, level 1, they do not talk about sales variances. They only talk about material variances, labor variances, and other variable overhead variances. That is introduction to management accounting level 1. But our level 2 paper, management accounting, and the variances, we have to know how to calculate, first of all, sales variances. And we have two main forms of sales variances. We have the first one, pardon me, we have the first one, sales. So let me just make it A, right? So we have sales price variance. We have it as sales price variance. We have the second one as sales volume variance. So the first one is sales price variance. The second one is sales volume variance. Sales volume variance. Then we come to material variances. So we have the second type of variance to be material variances. Material variances. Material variances too, we have two forms. Pardon me. We have material price variance. Material price variance. Then we have the next one to be material usage variance. Material usage variance. So these are the variances: material price, material usage variance. Then it ends there for material variances. Then we come to labor variances. But with labor variances, we have, let me just do that. So the next one is labor variances. Labor variances. These are the types of variance. I just want you to see what is happening. Not doing any massive work, just want you to see what is happening. So material variances, we have labor variance, we have labor rate variance. We have labor rate variance all the time. This is what I do when it comes to issues of variances. I pick the issues up, then just start writing in there. Then we have labor efficiency variance. We have labor efficiency variances. Labor efficiency variances. Then it ends there for labor variances. Then the next thing we look at is overhead variances. Overhead variances. So that will be point 4. Overhead variances. Pardon me. Overhead variances. We have two main forms of overheads. We have the variable overhead variance. Then we have the fixed overhead variance. I will look at it later on, but let me tell you the types of variable overhead variance. We have variable overhead expenditure variance. Then we have variable overhead efficiency variance. Then we come to the next one, which is fixed overhead variances. We have two main forms of fixed overhead variance. We have fixed overhead expenditure variance. Then we have fixed overhead volume variance. But the fixed overhead volume variance is captured into two, or we have a breakdown of it into two. The fixed overhead volume variance can be broken down into fixed overhead efficiency variance and fixed overhead capacity variance. So after going through all these, then you have studied what variances. But I'll start again to explain what you mean by even the word variance. But just students are to note that the way of presenting profits, profit table is presented as sales. Hello, it's presented as sales. Profit table is presented as sales. So let's say the sales value. Let me put this in XX. Then come to the next one, you less variable cost. I just want to show you this for you to see what I really want to talk about. Any of the items that we deal with in the case of your paper, so less variable cost. Variable costs. Variable cost, that form, right? So variable cost is taken out. Variable cost is taken out. So we have variable cost being taken out, say, of that form. So we have variable cost being taken out. Then after getting the variable cost, the next thing is to look at the contribution. So variable cost, then we have contribution. Let me just subtract fixed cost from it. So let's say contribution. Then the contribution, after getting the contribution, you will now take fixed cost out of it. You now take fixed cost out of it. So you less fixed cost again, pardon me, less fixed cost. Now, the same things we do in calculating a normal profit. These are the items that we consider in also calculating what? That is our basic variances. So at the end of the day, you end up getting your profits. So what is happening is that we have sales variances. What do you have? Sales. The sales here is SX. So because the first item is sales, we also have discrepancies which can come in sales. So we have sales variance. Then the next one is variable cost. When you talk about variable cost, we have a lot of elements under variable cost. We have material cost, which is a variable cost. So that is why we have material variances. Then under variable cost, we can have labor cost, also a variable cost. And that is why we also have labor variance.